All of your favorite stock market and crypto gurus are probably telling you that your equities and your crypto are going to go up because guess what? Global M2, the money supply is on an uptrend, and that means that your Bitcoin and all of your risk on assets are now going to appreciate. Well, in this video, I'm going to show you some other correlations that I think are actually even more important than global M2. And I actually think they somewhat make the global M2 worthless in this scenario because of where the market is. So I can almost guarantee you have seen this chart somewhere online, right? This is, I think, posted from Rob Powell, but it's all over X and YouTube, and everyone's pointing to, hey, there's a 10 to 12 week lag on Bitcoin. If you just watch what global M2 is doing, Bitcoin is definitely going to follow exactly where global M2 is. Look how much it's correlated. When we take away that 10 to 12 week lag, you're going to see Bitcoin and you're going to see equities and all these other risk on assets go up. But the problem is they're really only looking at that and maybe a few small correlations with the business cycle, but they don't understand what type of environment that we're currently in. So the question that we need to ask is, what else is Bitcoin highly correlated to? Well, it is actually very highly correlated to the US stock market. And I've done a lot of research on the 4-year cycle trying to disprove it because it has been so accurate previously, which is where people believe that Bitcoin's price goes into a 3-year bull market and a 1-year bear market based on the new issuance of Bitcoin getting cut in half every 4 years. So it goes on this 4-year cycle. But if you actually look at its high correlation, and specifically in bear markets, the correlation goes even higher. It has about a 0.7 correlation with US stocks. And I did some analysis on all of the Bitcoin bear markets. They had extremely high correlations with the equity market also coming down pretty significantly in the double digits. And you'll see that the first true bear market was also correlated with a big stock market decline. I know it doesn't look big because the chart grew tremendously after that. But then it did skip one bear market. So there is one missed time where stocks really, continued to climb over this time, which was 2014, 2015, 2016. And then they started to go flat, and Bitcoin was going flat over that time as well. But it did miss that correction. But I will say, my thesis is the reason why Bitcoin went into a bear market over that period of time when equities continued to slowly climb up was because Bitcoin just went up 73,000%. So if it goes up 73,000%, I think maybe a little bit of a bear market would be healthy. And then you see, once again, strong correlation. And the difficult thing in crypto is it is still considered a risk-on asset. Whether you think it's a store of value or whatever you think the use case is, it doesn't matter, because what happens is, at least historically, is Bitcoin typically starts to sell off about 2 to 6 weeks before the equity market. So it's actually a leading indicator to what equities are going to do, and it typically sells off quicker than what the equity market does. So people get rid of their risky assets first, and then they look at other things like equities. Okay, well, maybe this is my next riskiest thing. And then they start to sell that. So almost every Bitcoin bear market, again, with the exception of one, has had a extremely strong correlation to also an equity drawdown. And if you go ask Bloomberg, they have stated that there is a 0.7 correlation, which is a very strong correlation with US equities. Now, if you look at some statistics, this one from Cross Border Capital, you'll see that investors are actually going risk off. So it goes on these waves where investors love to go really strong risk on and bet the farm. And then you'll see that this orange line starts to come down, and we kind of go in these waves. And right now you can see this orange line is starting to roll over, which indicates that global investors are starting to go a little bit more risk off. And that is exactly what we've seen, especially over the last couple months since the new administration have stepped in. Now, you've probably heard me talk about my thesis in the stock market. If you have not, go look at one of my X posts or one of my last 3 YouTube videos. I go over some really important data about how much correlation we have relative to what we were seeing in 2008 with interest rates inside the United States and outside the United States, unemployment, and many technical things with the stock market, not to mention the yield inversion and uninversion. But another thing that people are sleeping on is the other side of liquidity. Okay, what is the Fed doing with their balance sheet? And they are still tightening. So you see this blue line going down. That is the Federal Reserve selling assets. So they are decreasing their balance sheet. Now, what that means for overall markets is you kind of have to swim uphill because the Fed is consistently selling financial assets, and they're typically in the form of bonds and treasuries. But you'll see that previous cycles with Bitcoin, if we go back to 2009, we really haven't had a time where they were tightening except for in 2019, or actually start of 2018, which was a huge bear market, into 2019. And then right when the market started to really trend up in 2020, we did see some easing where the Fed was then increasing their balance sheet after tightening. And this is before the COVID flash crash, and then you see this just a wall of assets that the Fed bought here, and now it's been on an uptrend since 2022. But since 2022, it has been on a downtrend. Also, if we look at the equity market and we think about 2008, and again, it's super important to go watch my previous videos about 2008 and the similarities that we're seeing right now relative to 2008. But if we look at 2008, the Fed was actually easing during that period of time. So they were buying financial assets. Also, M2 was also on the rise during 2008. So if we looked at, back in 2008, that's pretty much M2 was almost always on the rise. It's actually very rare for it to go down. It happened in 2022 where they were not only tightening, but they were also decreasing the money supply. But if we look at in 2008, right, even back from really since existence, since the 50s and 60s, you've seen M2 just consistently going up. And even that happened right before the great financial crisis, which this was really the last true recession, was the GFC, which this little recession here for the COVID flash crash was only 2 months. And then obviously we just printed everything into infinity. We bought a bunch of assets. There was helicopter money getting thrown everywhere. And we really have not had a recession since 2008, which is a very long time when you consider that most recessions are 6.5 years. Now, you may say, okay, well, there's more money in circulation. So even if we do see a correction in the stock market, like some of my previous videos talk about, if we see a meltdown like this where the stocks come down 20%, 30%, 40%, even maybe 50% plus, guess what's going to happen? Oh, there's so much money on the sideline. That's never going to happen. Prices are not going to come down that much because there's a lot more money in circulation. Aren't you looking at M2? Look how much higher this line is. Yes, I understand that, but it's all a relative game. So when we understand that Bitcoin is pretty highly correlated to the U.S. stock market and especially tech stocks, and then we look at, okay, let's go ahead and see what happened since 2008. Well, money supply went up 170% over that time. Now, how much did the stock market go up? Again, this is all a relative game, right? You're telling me, hey, there's way more money in circulation, so now they're going to buy stocks and risk assets way quicker if we ever see a correction. Well, maybe you're right if in relative terms, the money supply came way up higher than what the equity market did. But in fact, it didn't. And even if you price in the amount of earnings growth that we've had, stocks are still well above what the M2 has done since 2008. So if we look at 170% growth since November of 2008, stocks went up about 600% over that same period of time, which obviously is a lot higher. And earnings only went up just over 300% in the stock market since 2008 as well. So even if you factor that in, there's a lot of people could argue that stocks are still well overvalued, and if you compare it to bonds and commodities, and you denominate stocks relative to commodities and precious metals, they are way overvalued from if you look at really long-term trends. So the good news is when markets fall deeper, the Fed will drop rates, the Fed will print money, and the Fed will start expanding their balance sheet. But there needs to be some pain. And Donald Trump has specifically talked about this. Hey, we need lower interest rates. And he's also said, I don't care about what the market and the economy is doing because I'm trying to build for the future, the next 5, 10, 20 years. I'm not focused on the next 6 months. So he does not care if markets fall down. But when they do, The Fed will do those three things to bail us out once again, and scarce assets and risk assets like crypto are going to fly. I think we're going to go on one of the biggest bull markets that we've ever seen. We have the institutional adoption with true institutions getting into the digital assets industry. And, that adoption is now there. The foundation is going to get built. If we do go through a bigger drawdown in the stock market, my prediction is that we also see crypto heavily follow what the stock market does. But then again, these things are very likely to happen. And I believe that scarce assets like precious metals and crypto are going to go on a major, major bull market. The other thing is there's market neutral strategies now that are available to everyday high net worth retail investors. They can produce positive returns in a bear market, are uncorrelated to assets like stocks, crypto, and bonds, and don't require a ton of time or experience. So if you want to learn more about market neutral strategies and what we do in one of my companies called nerp.com, there is a link below to apply and speak to us about our different strategies that, again, are market neutral. Anyways, thanks so much for watching and good luck in 2025.